big sort of story today in private equity and in the financial sector, which you've been following for a long time as both a banker and now on the buy side. What do you make of this sort of in the aggregate of a private equity firm going into these two big German banks over the past few months?
Certainly. Well, we have seen for quite a number of years interest in private equity in the banking sector, going back to just post-crisis, really to recapitalize these banks. And that's been a global phenomenon. We have, in fact, invested in a couple of banks post-crisis. I think in this case, as we're coming out of the recovery, hopefully in Europe more broadly, as things are strengthening significantly, it's a very interesting play. Don't have any specific details or insight into the theme that Cerberus was thinking around the Deutsche investment. But I do think that as the economy is strengthening there, it could be a very interesting play on the German economy more broadly. Certainly there's some consolidation talk that's been in the works over there. And I know from our own perspective, we've been watching Europe very closely. We have one investment in Southern Europe, and we've seen significant GDP growth in Southern Europe in particular, coming out of the recession in the last couple of years.
So you think more deals to come in Europe, especially in the financial sector?
I do. One of the reasons that we like Europe and we continue to look closely in Europe is the financial services sector from a private equity perspective is frankly not as significantly invested in relative to the U.S. interest in the sector. And so we do not see as much in the way of competition. The processes, in this case, this clearly was a highly specific deal, but the processes more generally tend to be of less interest to the generalist private equity players in Europe when they're financial services focused. So we do expect there will be more interest and do think that you'll see more investments by private equity in Europe going forward.